After years of underperformance, the volatility has come back in a massive way to the BlackBerry share price this year. You can see just some of the moves. It came into 21, trading around $6 a share, and then briefly above $28 in January. We've seen another surge over the last couple of weeks or so. So why is all this going on? Is it just short term, or actually are we going to see a turnaround in the fortunes for BlackBerry? Of course, BlackBerry has been one of the stocks targeted by the WallStreetBets forum on Reddit, and we have seen quite the impact for the stock price, trading as high as through $28 in January, and then selling off, back towards $8 in May. Then we've been briefly above 20 again so far this month. I think it's quite difficult to apply any sort of sensible analysis to these sort of moves, but that's what we're going to do in this video. So as usual, I'll talk about some of the things that have been driving the price. We'll come back onto the platform and see, try and take a calm, cool look at the technical and chart outlook. Hello, I'm David Jones from Capital.com, and I thought the next stock we take a look at, one that has been in the news quite a bit this year, is BlackBerry. So as usual in this video, I'll go through some of the recent news around the company. We'll look at the levels to watch, then we'll jump back onto the platform and take a look at things in a bit more detail from a charting point of view. If you're watching this and you haven't subscribed, if you could click on subscribe, it does help us help support the channel, and it means we can continue to push out lots of content throughout the week on the different stocks that we look at. Okay, let's get into it and take a look at BlackBerry in a bit more detail. So I think if you're of a certain age, you're very familiar with the BlackBerry handset from the very early 2000s. The peak of users for BlackBerry, actually a bit later than I thought. It was in 2013. So back then they had something like 85 million subscribers around the world. But of course, as we know, the story since then is somewhat different. The world has changed, technology changed, and BlackBerry really lost out to the likes of the iPhone, obviously, and also Android phones as well. So really ate in and took the company's market share. And actually, if we look at the share price, it had foretold this anyway. Back in June 2008, that was the peak for BlackBerry shares. And back then, they were trading at $148 a share. By March of last year, March 2020, the BlackBerry price had slid below $3 a share. Nowadays, the company has a different focus. Its mission, it says, is in cyber security and the Internet of Things. So quite different, I suppose, from the BlackBerry those of us who are old enough remember from 20 years ago. But that's not why it's been in the news this year. It has, along with a couple of other stocks, attracted the attention of the WallStreetBets forum on Reddit. And BlackBerry has been one of the stocks they targeted to try and initiate what's known as a short squeeze. So they looked at stocks that had large short interest, so lots of companies, financial institutions betting against the share price, and then Reddit users, WallStreetBets users buying, so normal retail buying, but in lots of volume in an attempt to push the price higher, which happened. And if the price gets pushed higher, those who are short may reconsider their position and buy back to close their short and book a loss. That's known as a short squeeze. And I think it is something we've seen in BlackBerry. So in January this year, this is when we saw the incredible effect. The share price jumped about fivefold in January. You may remember GameStop from back then as well. Meme stocks, as they're known, have come back into focus recently as well. And even this month, June 2021, we've seen the stock more than double off the May lows as it once again came into the sights of WallStreetBets. The next quarterly earnings for BlackBerry are due out, I think it's towards the end of this month, 23rd of June. But how important are quarterly earnings when a stock is moving like this? I thought we'd take a look at it in a bit more detail. Let's take a look at the levels, then we'll jump back onto the platform. Just to show the volatility, look at the closest support and resistance levels I've picked up here. The high on the 3rd of June, $20.20. The low on the 3rd of June, the same day, $13.50. Incredible volatility, 30% swings in a day, for a stock, for a reasonably well-known, reasonably capitalized stock. This is the effect that WallStreetBets and Reddit have had this year. But to try and put some color on these numbers, try and make some sense of the noise, let's jump back onto the platform and take a look at things in more detail. So here are the moves over, the last 5 years or so for BlackBerry. Fairly uneventful stock. The price had been trending lower in this part of the chart that we're looking at from the beginning of 2018 when it was about above $14 a share. Then we hit the lows in March last year, trading down to $2.65. Perhaps let's focus on the last 18 months or so. Let's flip this chart over. If we ignore the volatile moves this year, which I know is easier said than done, we did have, a gradual upwards trend off the March lows. Coming into this year or the end of last year, we did see a slight succession of higher highs, higher lows. Clearly, the stock price has gone somewhat crazy this year, but so far that trend line is coming in around $6 a share. If we put a moving average on, we can see in both cases, actually, on the surge, the price had moved through the moving average. First of all, here back in January of 2021, January the 8th, pushing up through $7.50, broke the moving average. A move above a moving average is traditionally considered a buy signal. And again, back here towards the end of May, we had a move above the moving average. And again, at the moment, it is still above that moving average. So traditionally, that would be seen as bullish. But given the fact the share price has more than doubled off those late May levels, I think it's always difficult to apply any sort of sensible analysis because there are a couple of ways or three ways of looking at it. You either do nothing and ignore it completely. You buy in now, assuming that the price is going to continue higher, or you're perhaps a bit more patient and see if we get a sell-off back towards those $8 sort of lows or the area from late May. I think with these meme stocks, it's very difficult to apply any sensible form of analysis because we do get these bursts of volatility. So I think plenty of technical analysts would probably take the view at the moment that the better thing to do is stand aside. If we see some of this hype, some of this euphoria die down, do we see the price sell off again? Clearly for me, this whole area from April through to May, from $8 to $10, we did see the price finding some sort of support down at these levels. So I think if we do see it come under pressure from here in the weeks ahead, let's take a look at it again in that $8 to $10 area, see if we see the buyers come back in. But perhaps the price takes off again. We've seen plenty of these meme stocks move much further than we expected, but I think it's a difficult one to apply any sort of sensible analysis to at the moment. And as a technical analyst, a technical approach to this, I'd probably be happier to be a buyer of dips. So to stand aside and wait and see what happens, I think would probably be the purest technical approach from here and see if we get it drifting back to those late May levels. That's it for the update. We'll come back to it and see how things fare over the weeks and the months to come. But for now, from me, David Jones and Capital.com, we'll leave things there. Good luck with your investing. For more trading videos just like this, please subscribe to our channel.